Hi, Vivek. Thank you so much for
Hey
sitting
there.
down with us. Tell me a little bit about you and a little bit about Commerce Ventures.
Yeah, happy to do it, and thank you so much for having me. I am an investor with Commerce Ventures.
Hmm.
We're an early stage fund. We manage about 250 or 260 million dollars across four funds.
Hmm.
We just came off our fourth fundraise of 155 million dollars.
Hmm.
We've been around. I think this is almost touching year 9 for us,
Hmm.
and so we are early stage investors across what we call the commerce continuum. So where and how consumers and businesses shop, save, spend, and then secure their financial lives. If you boil that down a little bit, it's fintech, insurtech, retail tech. And even within there, there's that kind of break point between kind of full stack financial services and infrastructure. I'd say we kind of historically have leaned towards infrastructure. So our portfolio looks like folks like Bill.com and Marqeta and Socure, Forder, MX, folks like that.
Hmm.
But we also have kind of periodic investments in full stack companies like H.M. Bradley and Kin Insurance and Mulberry.
Hmm.
I probably focus 99% of my time in fintech and insurtech, and I've been doing this for 5 years. And before that, misspent youth in investment banking in fintech across kind of lending and payments and insurance. So this is largely all I know. So excited to talk about it.
So fintech goes deep in your veins.
It goes very deep, better or worse.
Yeah. All right, so tell me a little bit more about those three spaces. You said fintech, insurtech, and retail tech.
Yep.
So if we could just break those down and get a better sense of what they actually mean.
Yeah, absolutely. And I think we call it, again, I think I mentioned this before, we call it this notion of like the commerce continuum, which is more or less like how you live your life. I think one of the really interesting things about fintech and why we're seeing these like valuations being super high and why the market caps are so large is that like commerce is at the core of kind of most societies, right? We end up finding that where you spend your money and what you're buying and how you interact with those products and services after you buy them, all of them are underpinned and underlined by financial services or commerce generally. I would say, fintech specifically has kind of evolved into the individual subcategories. So it's payments, banking, lending, insurance. But I think what's really interesting is that, it's starting to seep into almost every facet of life. A really good analogy I heard was that back in the 80s, you would have a company that had an IT department. They would have technology kind of in a room, and that would be 5 people. And today, companies are technology businesses. And I think that's what we're seeing. So historically, if you'd asked me this question maybe 5 years ago, I would have responded with payments, banking, lending, insurance. But I think what we're seeing is that actually those 3 things are blending in with the entire ecosystem. So every software company is going to be a fintech company or have fintech elements. Kind of non-bank FIs are becoming a thing. And I think that it's going to be harder and harder to define where the category starts and ends, even more so in a few years.
Right. So what was at the periphery maybe 5, 10, 15 years ago has increasingly moved towards the center.
Yeah, and I think actually generally it's made the consumer experience a lot better, right? If you are a software company, rather than having to charge someone, X $100 a month, if you monetize on the payment, suddenly you can give that software away for free.
Right.
And I actually think that there's been such high demand for that type of monetization and interaction with platforms. I don't think that's going away anytime soon.
No, I don't think people want more friction in their lives, that's for sure, right?
That's true.
I'd love it if you could talk a little bit about the headwinds, the tailwinds in the space.
Yeah, happy to do so. I think that, one of the things that I've been spending a lot of time thinking about recently, which will kind of address this problem or topic, is vertical fintech. The concept of what verticals are going to be kind of really well suited to match up with fintech as an expansion category. And when we think about macro, I think about this change from analog to digital. So I think of construction as a for instance.
Right.
Procore went public recently. And there's an entire kind of $1 trillion industry that went from effectively through Procore, paper and pencil and email and Excel onto cloud-based software.
Right.
And I think that is really exceptional because the second you have digital distribution in a huge category, suddenly things like embedded invoice factoring and payments and communication and invoicing and billing, each one of those things is a $1 billion company, all of that in one subsector. And I think when I think about macro kind of headwinds, I think about kind of really, really interesting expansions into categories where certain places where fintech, the need has always been there, but there was nowhere to embed it or nowhere to distribute it. Those problems don't really exist anymore. On the kind of...
Can you give me an example of that?
Sure, happy to do so. So we're investors in a company called Constrafor. Constrafor is invoicing and billing tools for the construction industry. So general contractor will interact with a subcontractor, and after the project is finished, and after the general contractor said, hey, we've received payment from the client, let's say it's a building of, Facebook is constructing a building, even after the GC says, yes, we're going to pay you, it's like 90 days before the subcontractor gets paid. Right. If you think about construction, it's a cash flow intensive industry, right? They've got to go buy materials for the next job, pay their employees. And so you have this almost like totally nonsensical 90-day, maybe more period. And what Constrafor is doing is more or less giving away, invoicing, billing, communication platforms between the two, and post-adjudication, so barely any credit risk. They're actually giving the subcontractor the ability to get paid instantly.
Right.
And so this is, call it, I don't know how many tens of billions of dollars, but maybe more. I mean, it's a humongous industry. There's almost no credit risk. It dramatically changes the lives of both the GC and the subcontractor. And that's just one tiny sliver of one vertical that we're working in. And so when I think about the ability to do that, right, now that the construction industry is kind of more digitally savvy than they were 10 years ago and willing to engage with platforms like this, I think kind of the possibilities end up feeling endless. I'm sure they're bounded at some level, but not so much today.
Right. We're still in the nascent stages.
For sure.
Those bounds are far away.
Yeah.
Interesting. So when you think about the impact of COVID on this entire space, I know one obvious, impact is that anything that was going to happen just got accelerated.
Sure.
Tell me a little bit more about how you've seen the space change.
Yeah, I think one of the really, really interesting things that have happened is that some markets have gotten so much bigger so quickly. And as an example, I think about like e-commerce or e-commerce fraud, or one of our investments is a company called Socure. Socure helps with account opening for, we'll call it mobile commerce apps. Whether you're a bank or you're a fintech or maybe even a life insurance company, you want to make sure that the users that you are onboarding are who they say they are. That's always been a big problem, but as the world went digital instantaneously, the volumes of these applications or banks that used to have bank branches and now they're doing 100% mobile onboarding have gone through the roof. So something that was important became existential and critical. And so for that business, it's not just that revenues were accelerated, it's just the market has gotten bigger. People who never thought about opening a bank account over their phone have done so. And they love it and they're not going back. And the same thing with e-commerce, right? We've seen this with one of our portfolio companies, Mulberry, right? They're a warranty insurance platform. There are certain things that you and I maybe would have felt uncomfortable buying online 3 years ago, but we had to, right? That mattress, and you'd heard about people buying mattresses online and it wasn't for you, and then you needed to because your mattress sucked.
Right.
Suddenly you did it and you're like, this is great, and I got a warranty protection plan for it. And I think in those worlds, I don't think consumers are going back to where they were before. And I think as a result, if you're an infrastructure provider or even a direct-to-consumer provider in those spaces, I think there's more revenue today and likely more revenue tomorrow too.
Do you think that there are spaces that there will be more normalization, so to speak, like there will be a reversion?
I certainly hope that my DoorDash bill goes down over time. I'm not sure I can afford that for longer periods.
You want to eat out more, but in person?
I don't know where the money is going, but it's not in my bank account anymore. I think that there's certain kind of consumer habits like that. That are going away. And I would say on the flip side, if I think about like ride sharing and things like that, people who've held off from that for health and safety reasons will probably resume. But I think in digital commerce, and this is a kind of a weird, sometimes you can be too close to something for too long, and I'm aware this is one of my biases, but there's some certain things like peer-to-peer payments and not using checks that seem so intuitive to me that my suspicion is once you've tasted what life is like when you don't have to do that, if you're a landlord who was collecting rent checks in person for years and suddenly you finally were forced to get Venmo or Zelle, I don't know if you're going to ask your tenants to go back. I don't know if you can.
Right.
And so even if you did want to, I don't think both sides of that payment equation would ever revert back.
Right.
So I think at least in fintech, there's certain places where we're not going to see that happening.
Right. So when you look at the space over the next year, through the end of 2021 through 2022, what do you see as the biggest changes? Where will we be in a year and a half?
So I think we live, and I've heard a lot of people say this, but I think we live in a little bit of a new normal. I think that, I have a mentor who always says this, where, venture capitalists, what they think is going to happen is what they need to happen, right? It's very tempting to predict the future, to feel like it'll line up with where you've made your bets. And I think in the effort to not do that, I think the reality is, I don't know if there's going to be a finite end to what we're going through. And I think as a result...
You mean there won't be a finite end to COVID and it will be essentially an ongoing thing that we will have to deal with?
I think that there's, COVID, which I'm probably not qualified to speak on, but there's consumer mentality that I am. And I think that consumers and their personal insecurities, justified or otherwise, are not going to get resolved over the next 12 months. I think various pockets of the country and the world will be in different phases of comfort on how they transact and where they transact. But what I do know is COVID has given technology a chance.
Right.
And folks who get exposed, whether it's a digital notary or pay by text at a restaurant, I think that those experiences are so compelling that once you've had it, you're going to continue to demand it. And I think what will happen is over the next year, the vocalization of those demands are going to continue to exist. And I think players that exploit that, just the same way we've seen employers that are willing to go fully remote have been able to acquire a lot of talent. I think the incentive to let consumers have what they want, which is a seamless digital payment experience, is going to be too high for folks to fight it too long. So I don't know if we're going to see the pullback of a lot of the trends that we've seen over the past kind of 18 months or so. I think what will be more interesting is kind of what the next thing is, right?
Right.
What kind of, what after 24 months of being majority digital, like what are those things that we're going to now start asking for that we hadn't even thought about asking for 2 years ago?
Right.
I think that's really interesting, and I haven't figured that out yet, but I'll let you know when I do.
So it's interesting about I want to break down the demand side of things just a little bit more, right? So when I think about the rapid, almost hockey stick-like acceleration of certain trends, right? Like digitization of signatures, right? From what signature to online, right? From that to maybe something like utilizing Zoom obsessively, right? Like you had these little pockets of industries that just had unprecedented, probably never seen again type growth, right? Do you think that those companies have gotten themselves in a bit of a bind with respect to their valuation, where they are, their growth prospects?
It's a really interesting question, right? I had talked to someone yesterday who said something very interesting, which was Zoom will never make more revenue than they make today, which is interesting.
Unless they pivot.
Of course, unless they pivot. The reality is that like great companies will come up with great next products, and I'm sure people said that about Apple at some point, about with their phones and whatnot. I think that what people maybe who don't live and breathe fintech don't fully perceive, that I think we maybe do, is that the penetration into the markets for all these products is still like in the single-digit percents. Right, like even with digital notaries, companies like Notarize, they're doing phenomenally well. I can't imagine that they are a double-digit percentage of the total country's notarizations. And so while the burning...
Even accounting for the growth that happened during COVID where people were forced to do that?
For sure. And I think about this, and I look at another category, right? Like rent is a great category. Like 90% of rent is still paid by check.
Right.
Even today. Right. Like I think that the penetration numbers are so small. And I think that like I really believe it when I say I think we, folks are talking about like first half versus second half of fintech. I think in some categories we might be in like a first of 9 innings or 2 or 3 innings into a pretty long game. Because I think that, full penetration into these markets is just the first part.
Right.
Like I think it's more about like this is catching up to technology that we've had for a long time. Like a great example is QR codes. QR codes have been around since the 80s to like label auto parts.
Right.
And we're still struggling to get them into restaurants.
Right.
Right. And we needed COVID, and still you can't pay by QR code at most places. So I think actually that there's going to be a lot more to come. I'm pretty optimistic about that. My suspicion is like there might be some like revenue slowdowns incrementally as some people begin again grappling with that uncertainty of what their lives look like. But over long periods of time, I feel pretty confident that you never bet against great product.
Right.
Right. And I think a lot of this stuff is truly great experience relative to what folks have been dealing with before. So I think we'll see kind of the recovery or like the ongoing kind of like penetration of these businesses over 10 years.
Right. So if we're in the early innings of a lot of the trends that you mentioned, what trends are we in the later innings of? What things are we on the tail end of? I
think there's some categories like remittance that have done kind of really, really well, that have already done like quite well. There's some stuff in like, core, peer-to-peer payments that are really interesting. But weirdly, even then, and I think you can see how much of a fintech fanboy I am, you have things like crypto that are coming out of left field, and suddenly categories that we all thought were done, like remittance is a great, or like cross-border payments that we thought were done and established, suddenly they're the most vulnerable to day-to-day disruption. So I kind of think a easy way to make yourself look like a fool in venture is to write off a space.
Right.
I don't necessarily know. I'll go back another example, right? Like I think 5 years ago or 4 years ago, if you'd ask someone like, hey, is alternative lending done? We had the tail end that people would have said yes. Then people came up with creative off-balance sheet credit models, and suddenly Affirm and Afterpay has gotten purchased for $30 billion. So I think things in this space are constantly iterating. There's some places that are oversaturated with venture dollars today where it's hard to make incremental investments, or if you're a founder, it's hard to compete with people who have raised a ton of money in those spaces. But I don't necessarily mean that, I don't think that means that the space itself is at the tail end of where like innovation can get it.
Got it. Yeah. It's always hard to identify that inflection point, that's for sure,
Yep.
So you mentioned crypto, right? So I'd like to just bring up blockchain and see, where your thinking is and how it integrates into the fintech stuff that you look at.
For sure. I think for a long time, because of our historical kind of proclivity to B2B, our thought was, hey, we'll really start investing in blockchain companies when they get commercial adoption. And I think as a result, for a long time, and maybe longer than we needed to, we kind of stayed half an arm's length away from a lot of the more interesting technology. And I think we've kind of like learned our lesson. We have a handful of companies in our portfolio like Baton that does interbank settlements, or Paystand that does B2B kind of invoicing and kind of payment acceptance that use the blockchain as a functional kind of building block, and that works.
But they're all B2B companies?
they're all B2B, and that works kind of really well for them. I think where we've kind of recently found kind of a lot of excitement has been on the kind of KYC AML side. I think one of the things that we've grappled with as, you can't wish crypto away.
Right.
For whatever
was the lack of KYC and AML one of the things that was making you hesitant to enter the space?
I think particularly when we started looking at it, we had looked at kind of the fraud and kind of like mismanagement rates inside of blockchain, and we had kind of been convinced that there wasn't really a commercial viability here.
Right.
And I think we overlooked something that was very interesting, which is again like that concept of never betting against great product. Whether or not you understand or appreciate why retail investors engage with crypto, they are. And I think in the context of the world that we understand very well, which is banks and card networks and processors, in that world, if you have a single dollar's worth of exposure to crypto, you basically are susceptible to a 9-figure fine, right? Or at least an 8-figure fine. And FinCEN has come down and done that multiple times now with $100 and $200 million fines. And I think the other really interesting thing is traditional fraud prevention tools don't really work here. Right? Traditional fraud prevention tools are rules-based. So they say, hey, here's our long list of accounts that you can't be on. If you're on them, we're going to block you. But in a world where you can spin up and down accounts in seconds and split out payments to 15 different accounts and shoot them back to another account, it's really hard to work that way. And I think is we looked at our own portfolio and companies like Forder or Socure, where we've seen them be the Gen 2 or Gen 3 of kind of fraud prevention and AML and KYC in their categories. We've been really excited about what that could mean in crypto, right? What if you are looking at the flow of money or the pattern of money movement to detect whether or not something is fraudulent relative to the actual account?
Right.
And so I think we think a lot of these like derivative tools are really interesting. Another example is, we're investors in Prime Trust. Prime Trust is a kind of, I think of it as almost like a banking as a service provider for crypto. So they power folks like Binance and others and enable them to move money and store and value in escrow and things of that nature. So I think where we've been the most excited is thinking about less about the individual currency or the individual play, the consumer play that resonates with consumers, because I think that's still a little tricky for us to understand. But I think that we believe that it'll be here for a long time, and that both entrepreneurs in that space need tools, as well as kind of financial institutions that interact with those assets need tools. So that's where we're going to spend a bunch of our time.
You guys are focusing on any type of Web3 that's more business to business oriented, more of a commercial application.
I think it's harder to guess where it goes. I think weirdly, I think of it as a relative inevitability. I think NFTs are here to stay and a few other things. I think figuring out which D2C platform, I think that requires a depth of crypto knowledge I can't claim to have. So I think for us, the easier, more de-risked understanding is, hey, what are the kind of all tide raises all ships kind of bets we can make.
Yeah, raises all ships.
That we can kind of capture, recognizing that we have the conviction that consumers want this and will want this, but not sure through which medium. So let's go and find things that enable all mediums to be successful.
I think that's a great place to end it.
Cool.
Thank you so much for sitting down with us. I really appreciate the time, Vivek.
Thanks for having me. Super